Vitalik's master plan that could send ETH to the moon. This might sound a bit dramatic, but Ethereum's about to flip the script. Again, Vitalik Buterin just dropped a major bombshell, a new plan to supercharge the one and only Ethereum virtual machine, known as EVM, and it's making even Wall Street perk up. If this upgrade plays out the way that it's being outlined, we could be staring down the barrel of a $10,000 ETH, or maybe more. And no, this is not just hopium. It's tech, it's timing, and it's money all lining up all at once. Welcome back to JRNY TV, where we break down the crypto chaos so even your cousin who still uses a Yahoo email can understand it. And today's topic, it's big, like Ethereum might break the internet kind of big. Vitalik's proposed EVM update isn't just a back-end tweak, it is a complete rethinking of how Ethereum handles computation, scalability, and can't forget that one little thing called cost. The new plan includes features like multi-dimensional gas and reduced code overhead that could make apps way cheaper to run, all while turbocharging that performance. And here's the kicker. While the devs build and rollups scale, ETH, those gas fees, well, they've quietly dropped to levels that we haven't seen since 2020. That's right, transactions are getting cheaper than ever before, just as the network's gearing up for its next exponential leap. You combine this with institutional momentum, BlackRock poking around Ethereum staking yields, and Bitwise calling for real-world asset tokenization to take off, and you've got yourself a perfect storm. Do stick around, because in the next section, we're diving headfirst into how much the elites are currently betting on Ethereum as the new financial internet. Wall Street is quietly betting big on Ethereum. All right, so here's where things get a little spicy. While retail is still busy chasing meme coins and flipping JPEGs, the big dogs, hedge funds, investment banks, and legacy asset managers, they are all quietly loading up on Ethereum behind the scenes. Maybe you're asking why? Well, that would be because it's not just a tech play anymore. It's becoming the financial infrastructure of the future, and the elites, they know it. We're talking the heavy hitters like BlackRock, Fidelity, and Grayscale, just to name a few, and they're not messing around with this. The institutions are piling into Ethereum exposure via futures, staking strategies, and most importantly, ETFs. And with the SEC recently approving options trading for Ether ETFs, that's not just a nod of approval. It's a freaking red carpet rollout for Wall Street to dive in head first. If you think the Bitcoin ETF pump was big, well, you just wait until ETH has its moment. The floodgates haven't even opened yet, but the locks, they're coming off. And this isn't just because Ethereum's cool tech. It's because real money is being built on it. Tokenized stocks, bonds, real estate, even entire yield-bearing strategies are starting to show up on Ethereum. Kind of new. Bitwise dropped a report saying that RWA's real-world assets are going to be the main reason that ETH hits all new time highs in 2025. And if you don't know what RWAs are, you should definitely take a look into them. It's not speculation. It's insight from a fund that literally builds crypto investment products for institutions around the world. So yeah, when you hear folks say ETH to $10,000, it's not just a meme. It is starting to sound like a baseline. Up next, we will break down what Vitalik's actual upgrade does under the hood and why it may flip the switch from Ethereum's cool to Ethereum runs the world. Vitalik's master plan, the upgrade that changes everything. All right, so let's talk about the upgrade that got devs hyped, VCs talking, and Ethereum haters, well, they're unusually quiet. Vitalik Buterin just proposed a major EVM level revamp aimed at supercharging the entire network. And it's not just about performance, it's about future-proofing Ethereum for mass adoption, RWA tokenization, and we can't forget that good old financial dominance. The upgrade, it's part of Vitalik's broader vision to make Ethereum leaner, cheaper, and more modular. He's looking to simplify how the Ethereum virtual machine, the EVM, processes data, which would drastically improve how dApps operate, how layer 2s interact with the base layer, and how smart contracts scale. In short, this update could make Ethereum feel less like a congested highway and much more like a speed bullet train with dedicated tracks. But here's what makes it really wild. This EVM upgrade, it ties directly into Ethereum's RWA dominance. If Ethereum can handle thousands of financial instruments, stocks, bonds, tokenized treasuries, you name them, all while keeping gas low and speeds high, it doesn't just remain competitive, it becomes unstoppable. We're already seeing protocols currently spin up tokenized versions of Tesla shares, real estate contracts, and yield-bearing assets. This is exactly the kind of thing that Vitalik's plan aims to make cheaper, easier, and faster. And the best part, gas is already down, and we're talking 2020 levels. And that means Ethereum's network is becoming more usable right now than ever before. And that's even before the full upgrade hits. Imagine what happens when the efficiency becomes permanent. The rails are being built, the money is circling, and the question isn't if Ethereum is ready for prime time, it's how fast it'll get there. Coming up next, we will zoom in on how real-world assets assets are turning Ethereum into Wall Street 2.0, and why every institutional player is quietly laying their Ethereum bets before the world catches on. RWAs on Ethereum, Wall Street's new playground. All right, let's cut to it. Ethereum is no longer just a playground for DeFi degens and NFT bros. It's quietly evolving into the financial infrastructure for the next century. And the center of this transformation? Real-world assets, stocks, bonds, commodities, treasuries, all being tokenized and deployed directly on Ethereum right now. And big firms, they're starting to get the memo. BlackRock, Franklin Templeton, and JP Morgan, just to name a few, have already dipped their toes into Ethereum-based tokenization. Bitwise has even put it bluntly. They believe that RWA growth is the biggest catalyst for Ethereum hitting all-time highs in 2025. Newsflash, we are in 2025. And the math? It definitely checks out. Ethereum's smart contract system allows for automated compliance, instant settlement, and 24/7 markets. Traditional finance cannot and has never done that. Not even close. Think about it this way. We're talking about trillions of dollars with a T in value that have been stuck in outdated systems, suddenly becoming liquid, tradable, and programmable. Finally, and this is not just bullish, it's revolutionary. Ethereum becomes the NASDAQ, the New York Stock Exchange, the bond market, all rolled into one global decentralized platform. No downtime, no middlemen, and wait for it, no friction. And while everyone's distracted by the meme coin of the week, Wall Street is buying Ethereum. They're building infrastructure. They're applying for ETFs. They're launching pilot programs to tokenize retirement accounts. It's happening right now, just not loudly. Next up, we will break down what this means for Ethereum's price and why some of the most conservative analysts are suddenly throwing around a $10,000 price target like it's a baseline. $10,000 ETH is closer than you think. So is Ethereum at $10,000 still a moon boy fantasy, or are we looking at the most obvious trade in the entire market right now? Let's connect the dots. You got Vitalik laying the groundwork with major EVM upgrades. Gas fees are currently down. Scalability is going up, and Ethereum is becoming cheaper, faster, and smoother to use than ever before. That alone brings users back, and in numbers. But then there's Wall Street. ETF approvals, institutions buying, RWAs getting tokenized, and don't forget entire asset classes migrating to the blockchain. And all of this demand, it funnels back to ETH. And here's the thing, ETH is becoming deflationary. With EIP 1559 and staking locking up more and more supply, we're looking at a massive squeeze incoming. It's basic supply and demand. Less ETH on the market, more people needing it, and bigger players coming in heavy. Price only goes one direction, up. Even the skeptics are softening. Standard Chartered, Bitwise, and even Alex Becker, yeah, they're all circling around that $10,000 price target. Not someday, not in 2030, this cycle. Because for the first time ever, Ethereum isn't just promising utility, it is in fact delivering it right now. So what do you think? Are we about to witness Ethereum escape velocity, or is there another layer one lurking in the shadows? Drop your thoughts in the comments below and let's get this conversation started. And of course, be sure to hit that like button, smash subscribe, and tap that bell so you never miss what's next. Thanks for riding with us here at JRNY TV. Until next time, stay curious, stay bullish, and stay early.